The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. How about you?
Oh, not too bad.
I know I'm like a lot of listeners. We thank you so much for helping us to earn money in the market, and Mr. O'Brien also, and what you all do at TFNN. It is absolutely huge. We appreciate it very much.
Well, I appreciate that comment very much, and I'm sure Tom does too. Thanks very much.
All the best to you and your family, man. I'm telling you, we so appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. It makes my day. Thank you.
Okay, buddy. Take care.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Happy Tuesday. Welcome to another edition of Breakout Investing on TFNN. 5 days a week now on the TFNN radio network from 3 to 4 Eastern. Number to use to get through, 877-927-6648. If you can't listen to the show live, no worries. You can always pick it up as a podcast over at iTunes, and don't forget to listen to TFNN programming on your smartphone as well. If you're out and about, plug those earbuds in, type in tfnn.mobi in your smartphone browser, and you can listen to the stream that way as well. And to look at charts live with me as I'm doing the show, you can do that on Tiger TV, right on the homepage of tfnn.com. The show is carried live on Channel 1. It is archived in Channel 13, and Tiger TV is also viewable on your handheld device as well. 877-927-6648. Another kind of constructive day for the market here, not moving much in either direction. A lot of people saying the bottom's about to come out of this market. The bulls are saying, the fact that indices are holding on to gains here is a bullish sign. So we'll see. The market, just aren't any sellers around, no doubt about that. So start by checking in on the NASDAQ composite here, down about 4 points today to 3174. 3174. Let's check a chart of the NASDAQ composite here. And we'll see the NASDAQ still holding comfortably above its 10-day moving average at 3136. Its 20-day moving average at 3102, and the 50-day line all the way down at 3015, thereabouts. So got some short-term support levels to watch for the NASDAQ composite. And while we're at it, let's take a look at the S&P 500 here as well, with the 10, 20, and 50-day moving average plotted. The S&P right now down about 3 points, not moving much, trading in a very tight range, down close to 3 points to 1458. So from my perspective, another constructive day of trading here. Some growth names under some pressure, but not much volume. Yesterday, of course, the Jewish New Year, Rosh Hashanah, so trading volume was pretty light on the New York Stock Exchange. Yesterday we had about 893 million shares. We are tracking pretty close to that today, just a little bit lighter. And on the NASDAQ yesterday, volume below average at 1.46 billion, and we are tracking a little bit higher than that today, about 15 to 20% higher than that on the NASDAQ. So stock's not moving much in either way. Not too bad a performance considering we heard from FedEx this morning. FDX, shares of FedEx right now down 2.6% to 86.95. Still a technically troubled stock here. Looks to be pretty good support in the 84 area, but this is a company where fundamentals are just very much in question. Of course, FedEx earlier this month, I believe it was on September 5th, they had an earnings warning. The company made $1.45 a share. That was 5 cents above estimates earlier today, but down slightly from a year ago. Sales rose 3% to $10.79 billion. That was a little bit better than expected because analysts were looking for sales of $10.7 billion. The outlook wasn't great. It forecast a fiscal second quarter profit of $1.30 to $1.45 a share, well below the consensus estimate of $1.67. So FedEx having a rough day today, but overall the broad market is holding up just fine. Let's see how the transports are doing today on the disappointing outlook from FedEx. Yeah, you can see a big drop in the IYT. This is the iShares Dow Jones Transportation Average Index Fund. It is down about 1.1% today to 90.82, and a big decline yesterday for the transportation ETF as well. So 2 straight days of precipitous declines for the IYT. FedEx is the second largest holding in the IYT, and Union Pacific, the railroad operator, UNP, is the top holding. We'll see shares of Union Pacific after 7 straight gains. It actually fell in price yesterday in fairly light volume, and down again today, but only down 51 cents to 126.40. That's shares of Union Pacific. Taking a look at crude oil today, down 1.4% to 95.29 a barrel. Take a look at the U.S. Oil Fund, USO. See, it tried to get back above its 200-day moving average on Friday. Big volatile day of trading yesterday. Again, that was because there were rumors of a possible strategic petroleum reserve release, but you can see the big reversal yesterday in huge volume. USO is extending losses today, down about 0.8% to 35.47. So one would think that the 50-day moving average here at 34.65 would be a likely support level. We'll see how that plays out. December gold today up 60 cents, not much, to $1,771.20 an ounce. Take a look at the GLD as we normally do when we check out gold. The Spider Gold Trust up $1.06 today, 0.6% to 171.46. Still showing relative price strength here, certainly in light of what the Fed announced last week, with the dollar being as weak as it is. That has provided a pretty strong bid for gold at this point. Economic data today. We had the National Association of Home Builders Wells Fargo Housing Market Index rise in September for the 5th straight month. It's at its highest level since June 2006. So that's good news. More good news for the housing market. Alongside that news, Goldman Sachs reiterated its bullish tone on the home building sector. It named a few stocks as its favorites in the home building group. Let's take a look at MDC Holdings. The positive comments from Goldman Sachs is not helping. You have to remember about these home building stocks. They are very, very extended up here. Okay, so they broke out weeks ago. So you don't want to chase these things up here. So despite pretty good news from the National Association of Home Builders, Wells Fargo Housing Market Index, and also positive comments from Goldman, MDC under pressure for 2 days in a row. Not much volume here, but still down 1.3% to 37.74. Goldman also had positive things to say about Toll Brothers, TOL. So let's check in on shares of Toll Brothers. Also near its session low today, down 1.5% to 35.19. Pulte Group, PHM, was also mentioned by Goldman. We'll see. Pulte Group is another very extended stock here. You had a breakout over $11, $12 a share back in July, and it's just been running higher ever since. So you've got its 50-day moving average at around $12.70, which should be a good support level eventually for Pulte Group, but it is down 2.2% today to $15.77. And finally, KB Home, also mentioned positively by Goldman Sachs. Some are saying that now that Goldman Sachs is still talking bullishly about the home builders, it's time to sell. And I would say that after the run that they've made, at some point they're gonna base, they're gonna consolidate, they're gonna come in price and consolidate a little bit. This could be the early stages of what is happening. So KB Home down 1.4% today to 12.72. Tomorrow we've got actually a lot of housing data. On Wednesday we've got housing starts and building permits for August. I think that's 10 a.m. Eastern. We also have existing home sales for August that will also be released tomorrow. On Thursday, the Federal Reserve Bank of Philadelphia's manufacturing index will be released, otherwise known as the Philly Fed. It's been in contraction territory for 4 straight months, and it's expected to contract again to a reading of -4. Remember, yesterday we got contraction in the Empire Manufacturing Index. That's a survey done by the New York Fed. So manufacturing data definitely still sketchy at this point, shall we say. Let's take a look at shares of Yahoo. Interesting news from Yahoo related to its stake in Alibaba Group. This is a China-based internet company. Well, apparently the company is ready to start cashing out of its big stake in Alibaba. Under terms of the deal, Yahoo will receive about $6.3 billion in cash, $800 million in preferred stock, and another $550 million after a technology and intellectual property licensing agreement between both firms was amended. So I think the total value here is going to be more than $7 billion, and see Yahoo today up 1.4% on the news to 1590 after hitting an intraday high of 1617. So I would imagine that Yahoo longs are happy that there's some uncertainty has been alleviated here. Certainly, Yahoo's going to get a lot of cash from this deal, and now the question longs will ask is, what are you going to do with the cash? You're going to return it to shareholders, go out and make an acquisition. Yahoo definitely has options. Let's take a look at shares of Research in Motion. Also in the headlines today, this has been obviously a beaten down stock. It is up 3.3% today to $7.49 on news of a patent licensing deal with Microsoft. When the headline first came out, everybody's thinking, oh, Microsoft is paying Research in Motion some money for some of their intellectual property, but that's actually not what happened. RIM is licensing technology from Microsoft. So, but still, RIM is up on the news, 3.3% higher to $7.49. Still a broken stock here, not a name that interests me. Let's take a look at Advanced Micro Devices. AMD shares under pressure today, down almost 10%. Look at that. Another, broken stock in the market here. Last trading around $3.62. Its CFO, Thomas Seifert, is leaving the company. As a result, BMO Capital Markets cut its price target in AMD to $4 from $5 a share. Here's a new issue, Manchester United, that came public in August at $14 a share. It's been a kind of a rocky road for Manchester United. They operate the UK soccer club, the Premier League. They, again, went public in August at $14 a share. They lost 9 cents a share in their first earnings report as a publicly traded company. Sales down 25% to $74.5 million. Tell you what, when new issues start reporting earnings, you want to see really super fast earnings and sales growth. You don't have it at Manchester United. That's why the stock can't get out of its own way here, down 2.5% today to $12.63. We'll be right back, folks. You're listening to Breakout Investing on TFNN.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. 877-927-6648. Give me a call. Let's talk about this market. Are you bullish? Are you bearish? Going through some other headlines today in earnings news. We talked about Manchester United kind of struggling in its early stages as a publicly traded company here. Earnings, top line growth, down from a year ago, 25% to $74.5 million. Not really my cup of tea here, but I tell you what, Shreve Nutrition, SHF, this is a small stock, market cap under $1 billion, but a bullish move for the stock today. Shreve Nutrition makes vitamins, nutritional supplements, protein bars, things like that. But big move for the stock today, up 14.9% to $24.01. Earnings up 25% from a year ago to 20 cents a share. Sales up 46% to $85.1 million. That is ticker SHF, again on the New York Stock Exchange. And yeah, pretty nice growth here. You had a breakout over $19 recently and a big gap up today. Growth prospects look pretty good. They're supposed to earn, they're in fiscal 2013 already, so 80 cents a share is expected in their current fiscal year. That would be up 70% from what they made in fiscal 2012. And then fiscal 2014, they're expected to earn 98 cents a share, up 23% from the current year. So nice numbers from Shreve Nutrition. Some other headline stocks today. Let's take a look at Energizer Holdings. You know, Energizer, the battery company, has been a beaten down stock, really took a hit back here in early August, but big move for the stock to 11.3% to $75.59 on news of job cuts and other initiatives that will cut the company's costs by as much as $200 million. Also positive comments today, I should say, about F5 Networks from an analyst at Topeka Capital. Thinks that the networking company could see market share gains from Cisco Systems, hitting an intraday high of 111.58. Shares of F5 now trading at 108.22, still up 3.6% on the day, but near its session low. Here is yet another example of a stock that was able to move above support here around $98 a share, but looks like some pretty stiff resistance at the 112.75 level. So we'll see if F5 can take out this resistance level in the near term. It got close to it today, but again, it's being turned away here near its session low, down 3.6% to 108.22. A lot of growth names under pressure today. Let's take a look at Polaris Industries, PII. This has been a really strong performer. You see a heavy volume breakout here, over $79 a share. Here was the swing point. You've got several up days in a row, and then boom, boy, the bottom really fell out today, down 4.4% to 81.24. This stock was not mentioned very positively by CNBC's Herb Greenberg. He had a piece over on CNBC, 5 high flyers at risk of falling. Again, according to CNBC's Herb Greenberg, Lulu and Rackspace also made the list, so selling pressure definitely in Polaris. This is looking like a failed breakout at this point. Let's check in on shares of Lululemon, which headed into today. Boy, the stock was holding gains nicely, and shares of Lulu down 3.6% today to 74.64. A little bit of volume in this stock, just like Polaris. Another headline around Lulu today is that David Einhorn could have a short position in this specialty retailer that specializes in yoga wear. So Lulu under quite a bit of pressure today. And let's take a look at Rackspace. I know I've been talking about Rackspace on the show as a stock that is extended in price going into today. I got to tell you, even though it was mentioned by Herb Greenberg, again, these 5 high flyers at risk of falling, it is holding up quite well up here. It's down only 30 cents today to 65.21. So could see a little handle area here, could see a little more sellers getting shaken out of this stock. I would not be a buyer of Rackspace up here in early August. Again, this was a $48 stock, and now it's 65. So it's moved up quickly, hasn't consolidated, probably needs to consolidate before you get a new entry point here. So I wouldn't touch Rackspace at its current price level, but technically it's still looking pretty strong here. If it moves sideways, holds on to its gains, forms a new base, then you could see another heavy volume breakout. But right now, too extended to touch. Headed into our second break, folks. We've got a nice long segment coming up next, about 15-20 minutes or so. So give me a call, 877-927-6648. Ken Shreve with you, Breakout Investing on TFNN. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Markets trying to come back a little bit here. It's been very quiet in indices trading in a tight range today, but looks like we got the Dow now positive, up 11 points to 13,564. NASDAQ down 1 measly point to 3177, and the S&P 500 down close to 2 points to 1459. All right, let's take our first call from the day. We're going to stay in Florida here, talk to Mike in Ormond Beach. How you doing today, Mike?
Great, Ken. Ken, yesterday I listened to part of your show, and I know you were thinking that some of your growth stocks may be pulling back possibly to the 10-week moving average, and I was wondering what your opinion is as far as some of the indices, in particular the IWM, and do you think we could possibly pull back in that indice?
Well, yeah. Let me. I'll tell you what I'm going to do here. I'm going to put up the IWM here in Tiger TV, and I'm going to put some kind of short-term moving averages on here, because the IWM looks, the Russell 2000 looks like a lot of the other major averages right now. Still, not showing meaningful sell signals. It had IWM had a big breakout over 82 recently. Now trading around 85.60. So, short-term support levels. These are moving averages that I used when I was with IBD, and I know moving averages that people I grew up with the market they're using. So 84.61 is going to be the 10-day for the IWM. 82.89 is going to be the 20-day, and then the 50-day at around 80.50 thereabouts. So these are kind of three areas where it could, come down and find support. I think that any pullback that we get here, I'm just really not expecting, and I mentioned this in my newsletter that I put out earlier today, I'm just not expecting widespread damage. I think a lot of these leading stocks that you see out there, yeah, they're going to come in price, and some are going to stop at their 10-day and 20-day moving averages. Others might pull back to their 50-day, but I'm just not really expecting a lot of technical damage done to the market when we do get a pullback, because frankly it could come between now and the end of September, but more than 2-3%, 4%, I just don't see it.
Okay.
So with the IWM, you're at 85.60 right now, so 84.60, about a buck below where it is now would be the 10-day moving average. If it breaks below that, next stop would be probably right around 83, high 82s.
Okay. Well, great. Thank you very much.
So, all right, Mike. Appreciate it. Thanks for the call. All right, thanks to Mike in Ormond Beach. Yeah, that's pretty much where I'm at. This is just a tough market right now for shorts to really gain traction. You're really going to need some negative headlines. I mean, listen, we did not get a good headline today from FedEx. FedEx is a sort of an economic bellwether. Do I think it's a relevant stock in the market? I don't pay much attention to it, but there were some hoping that, you did get a good bottom line and top line beat from FedEx earlier today, but the outlook was pretty disappointing. Is there a chance that third quarter earnings season is going to be disappointing? Yeah, of course there's a chance of that. But let's just see how the market acts in coming weeks. I always say when, whether it's first, second, third, fourth quarter earnings season, there are always going to be disappointments. It's really how does the market react to the disappointments, and I think that you'll probably see some large cap companies that talk about weakness in Europe and weak business overseas, but then you're going to have a lot of newer companies, innovators, recent new issues that are, that continue to deliver this robust growth on the bottom line and top line. And, I think overall third quarter earnings season should be pretty decent. And, with what is going on in Europe, headlines quiet over there. Some talk about what Spain is going to do. Are they going to, eventually seek a bailout? Or won't they? Another round of quantitative easing by the Fed. I mean, this is a market-friendly environment, and we also have a weak dollar here too. And some are saying, well, that it's only a matter of time before the dollar bounces from oversold conditions. You can see it was up a little bit yesterday, but the U.S. dollar chart here is broken, and it's got some serious resistance to work its way through if it's going to, gather any momentum here. And I just, it could happen, but I'm just not seeing signs that it's about to happen. So there's just a lot of things in place here for more money to come into the stock market. My tune will change if I start to see higher volume declines in the major averages. I start to see early strength followed up by late afternoon weakness, and perhaps most importantly, I'm going to use my Ultimate Growth Stocks model portfolio as a proxy. It's going to be my guide. I'm going to watch the price and volume in stocks that I have in the model portfolio. If I start to see them break down in meaningful fashion with heavy volume, start to see signs that institutions are selling, listen, we'll start to trim positions, we'll take partial profits, and slowly start moving to cash. But it's going to take a lot more. I mean, even where we are, we'll go back and look at a chart of the NASDAQ composite here. weak earnings from FedEx earlier today. The NASDAQ is just holding really bullishly near highs here. So even if it does come in a few percentage points, that's really not going to damage the index from a technical perspective. And the fact that it's holding gains here, just like the S&P 500 and Russell 2000, I think is more bullish than bearish. So some other growth names under pressure today. Let's take a look at Lumber Liquidators, another big winner here, a stock that I would not be buying up here, very, very extended. You had a big gap up in July when the company reported strong second quarter earnings. Really didn't get much of a chance to buy it after the gap up, but this is an example. Everybody's saying, well, gaps always get filled. It's not likely that Lumber Liquidators is going to come all the way back down to that $35, $36 level and fill that gap. If it does, it's going to take a complete breakdown in the major averages for that to happen. But Lumber Liquidators under pressure for the second day in a row, down 4% today. A little bit of volume behind the decline today. Maybe finally some long-awaited profit taking, but Lumber Liquidators down 4% to 50.59. And also Stratasys, this three-dimensional prototyping system company. Stratasys really looking a little bit sketchy here. Big volume in the stock today, breaks below its 50-day moving average. This one clearly looks like it's ready to build a base. We'll see how the base, we'll see if it eventually finds a bottom here, but this is one that I would not touch. Yeah, it was a $72 stock back in early August at $59.61. Wouldn't say that it's on sale here. Big sellers in the stock today. So Stratasys looking vulnerable. And how about this oil refiner, Delek? Delek U.S. Holdings has been a tremendous performer. Another stock that's not ready to buy here. It could come down to that 23 level and find support, but shares of Delek getting hit today in heavy volume, down 6.5% to $24.60. And again, key price level here to watch is $23. That's its 50-day moving average. If it's really a super strong stock, which it could be, one would expect that it would find support at the 50-day line at 23. Today is Tuesday. That means I put out my latest update to Ultimate Growth Stocks, and I haven't mentioned Ultimate Growth Stocks. I've mentioned the model portfolio a couple times during the show, but if you want to see which stocks I have in the model portfolio, if you want to see what's on the watch list, you want to get my general market observations, you can get 30 days free of Ultimate Growth Stocks right on the homepage of TFNN.com. Click on the Newsletters tab. Then investment newsletters. You can also see Ultimate Growth Stocks on various different parts of the homepage as well. But basically send out a weekly update every Tuesday, and then Wednesday, Thursday, Friday, Monday, I send out occasional email alerts. It might be a buy alert for the model portfolio. It might be a sell alert. It might be a market update if I just have market thoughts that I want to share with subscribers. So be sure to check that out. You can pay yearly, you can pay monthly, but a lot of good insight, if I don't say so myself, with Ultimate Growth Stocks. So be sure to check that out. My investing style, listen, I spent almost 12, 13 years working for Investors Business Daily, so growth stocks are my bailiwick. I do like to target innovative companies. Sometimes they're newer companies. I don't fish in the Dow much. I don't fish in the dividend-paying stock area. I tend to find like newer companies that are showing good earnings and sales growth in recent quarters that are still in the early stages of being discovered by mutual funds and other big institutions out there. I'm not averse to owning large-cap stocks. There are several solid large cap names out there that I've owned in the past, but by and large I tend to look at kind of newer, more innovative companies, and they tend to be mostly from the small and mid cap area of the market. So fundamentals matter to me, technicals matter to me, and both have to be in place. I'm not just about buying a stock that's going straight up. There has to be a fundamental story that's driving the price performance with the potential to grow in coming years, because earnings growth is the Earnings growth and institutional sponsorship is really the ultimate drivers of a stock's price. So I want to make sure both of those things are in place when I add a stock to the model portfolio. All right, moving on. Let's take a look at some of these apparel makers. A lot of VF Corps. You know, VF Corps, some of their brands include Nautica, Wrangler, North Face, Timberland, Lucy. VF Corps coming off its high with a little bit of volume today, down 2.1% to 160.28. Had a nice breakout for VF Corps over 152, 153. You can see the swing point right in this area here. So, you know, another breakout that's working here, and looks like a breakout where it finally, you know, coming to some profit taking. Strong support looks to be in the 149 area. That is just a little bit below the breakout area for VF Corps. I didn't see specific news on these apparel makers, but PVH, Phillips Van Heusen, also under quite a bit of pressure today, down 2.9% to 91.54. Big volume in this name as well, but between both stocks, VF Corps and PVH, you can see they've been big performers in the market. So we're at a point where, you know, a little bit of profit taking would not be surprising at all. Not only in leading growth stocks that have been moving since July and early August, but also in the indices as well. So I'm not going to be disappointed if the market, you know, pulls back here. You just can't go straight up without consolidating gains. But I do think that the pieces are in place for a good end of the year here. So we'll keep our well, I'm going to keep my fingers crossed for that, because I'm still in the bullish camp here. Take a look at shares of ONXX. Remember, I talked about the fact that fundamentals and technicals are important to me. This stock has a beautiful chart. Onyx Pharmaceuticals. You had a nice move today, up 3.1% to 83.75. Nice technical breakout yesterday over 79.20, and some good follow through today. But so the chart really looks solid. Comes down to its 50-day moving average here, just respects the line, finds support, and again, a nice breakout in heavy volume yesterday, good follow through today. But Onyx, after making money between 2008 and 2011, it's expected to lose $3.22 this year, and a loss of $1.92 is expected for 2013. So there's a lot of optimism about this company's pipeline, and it does show some decent top-line growth in recent quarters, but 7% growth in its latest quarter, not all that exciting to me. So in the biotech space, there are other names that are more interesting to me. Here's a look at REGN, Regeneron Pharmaceuticals. It's been an outstanding performer in the market. It's lagging a little bit today. Again, a lot of growth names under pressure, some profit taking going on. Volume not heavy at all in Regeneron today, down $2.59, 1.7% to 147.12. And you can see these 50-day moving averages here do seem to coincide with a lot of recent breakout areas for some of these stocks that we've gone over today, but Regeneron's 50-day moving average is right around 137 thereabouts, but not much volume behind the move in Regeneron today. So that's what's going on there. Let's take a look at QuestCore, QCOR, name we've mentioned before on the show. QuestCore. It's an interesting, a lot of volatility in the left side of the base here. It corrected from $58 all the way down to about $35, $36. A lot of institutional selling in the stock, but it has managed to work its way higher. It's working on a handle area here. Could see a breakout at some point with QuestCore Pharmaceuticals, but not great price action today. It's down up 14 cents to 50.25 after hitting an intraday high of 52.63. So some sellers in the stock late. But we'll keep an eye on QuestCore, highly profitable drug maker here that makes drugs for MS and infantile spasms, things like that. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing. I think the most important thing to keep in mind about this market is that it remains a market that is under accumulation. That should be front and center in investors' minds right now. Simple as that. As we head into the close here, the Dow is up about 6 points to 13,558. The Nasdaq down 3 points, a little more than 3 points to 3175. S&P 500 down 2.5 points to 1458. So it remains a market under accumulation. A lot of the stocks that have been leading this market since July thereabouts continue to show very little in the way of sell signals, and very little in the way of sell signals in the major averages as well. I don't remember the last time I saw a meaningful higher volume decline in the Nasdaq or on the in the S&P 500. I think it was back around August 20th or 21st. So there just aren't any sellers around. Now the bears are going to say, well, it's only a matter of time, and we're going to get a 2% decline at some point, if not more, between now and the end of the month, and that possibly could happen. I'm not saying it can't happen, but it usually takes more than one or two higher volume declines to derail a rally here. So that's my general take on things, that the market continues to look more bullish than bearish at this point. We do have some IPOs on the docket this week. I mentioned them last week, but a company called Globe Immune, which is going to trade under the ticker GBIM. They develop therapeutic drugs for pancreatic cancer and hepatitis. The company plans to raise about $60 million by offering 5 million shares between $11 and $13 a share. Also, Trulia, TRLA. This is a company in a very similar business to Zillow. Let's take a look at Zillow. This one has been trying to move for some time, having some problems. Shares of Zillow right now up 6 cents to 42.67. Tried to break out over a swing point of 44 last Friday, but reversed in spectacular fashion. So its technical picture is a bit questionable at this point. Zillow is an online real estate firm. Back to Trulia, which is set to come public. They're in the same business as Zillow, another provider of online residential real estate services. Trulia, again, ticker TRLA, plans to raise $90 million by offering 6 million shares between 14 and 16. So those are two new issues set to come public this week. After the close, not much in the way of earnings, but tomorrow before the open, we're going to be looking to see what earnings look like from Ascena Retail Group. Let's check in on shares of Ascena. It's been in rally mode since the beginning of August. Rally mode in spades, actually. It was a $17 stock back in early August. It's now at $21. It is down 1.7% today to $21.04 ahead of earnings. They're expected to earn 29 cents a share, up 21% from a year ago. Sales up 7% to about $780 million. We also have earnings after the close tomorrow from AutoZone, AZO, and General Mills. And then after the close Wednesday, Adobe Systems. Let's check in on shares of Adobe ahead of its earnings report tomorrow. Adobe is expected to earn 58 cents. That would be up 5% from a year ago. Sales up 9% to $1.1 billion. Some nervous Nellies in the stock today ahead of the results. Shares of Adobe down 2.6% to $32.54. Its three-session winning streak looks like it's in trouble. Also after the close Wednesday, Bed Bath & Beyond. That should be interesting. That's a well-run retailer. Could see good numbers from them. Coming up next, the Tom O'Brien Show from 4 to 6 Eastern. Thanks very much for tuning in, as always. Another edition of Breakout Investing will be tomorrow, 3 o'clock Eastern. I'll see you then. Take care, folks.
Time